Hi, I'm Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate and keep clients aware of what is happening throughout the week in the stock market. Our goal is to close the gap in communication between clients and the actual person managing their assets. We use fundamentals primarily and technicals as part of our analysis. We hope the charts and education help clients and viewers alike. A friendly reminder that these videos are not to be taken as financial advice. Should you have questions, feel free to reach out to us through email, social media comment section, and make sure you subscribe to our channel on YouTube. You'll be notified when new material comes out. So let's hit it. Let's go directly into the charts. Key levels that we've been talking about. A little quick recap if you've missed the last couple weeks. The month of August tested the red range, the red highlighted range here that you can see. The month of August right here. Okay. We tested the 2800, the 2940 level. Finally got out. This was not a fun period to sift through. Finally got out on a tweet saying we will have a meeting with China in October. That's what did it. I'm being real about that. I don't know how concrete it is. Nonetheless, we are higher. We saw this nice candle higher gap up. I said last week, let's see if we get a little testing lower. We did. I wish I would have bought here in hindsight, but it's not that easy. We quickly gapped up and are right at all-time highs at this point. We are overbought at these levels short term. Doesn't mean we don't go a little higher. But you're like, Jonathan, you've told me in the past 70 is an overbought area. That is more of a longer term perspective. Short term, over the last 2 weeks, I mean, that's pretty flat, my friends. Doesn't mean we don't touch all-time highs. Doesn't mean we don't go another 2% higher. I just think we need a little bit of a pullback, kind of like this, test here and go up. Like this, test and go up. A 3, 4, 5% dip would be very, very healthy here. I'm not trying to be pessimistic. I'm just trying to be a realist here to say, let's look what's coming ahead. The Fed meeting, which, they basically already said we're going to have a rate cut, which is good. But is that priced in? I don't have the answer to that. I'm a little bit baffled by some of the moves the president has made. Usually he uses these meetings, these tweets as ways to keep the market up when we really need them. And we were actually technically, from a technical standpoint, keeping afloat very, very well. And so he's basically used this power now. We're headed into a Fed meeting at all-time highs where the Fed is saying inflation is, not really going in the right direction. But in fact, it actually is. Core CPI is actually going up quite high, much higher than I think they were expecting. So now they're kind of stuck where they kind of need to cut, but many analysts are questioning, why are we cutting here? They're trying to get ahead of an issue. The ECB did cut rates by 50 basis points this week, which I'm surprised we actually went higher from there, to be honest with you. So nonetheless, we're a little bit overbought here. Could go a little bit higher in the S&P 500, but that's kind of where we stand. You can see we are still above 50 RSI, which is good. I'm just being candid with you. This is good to see. Wouldn't mind a little test at the 50 and go up. Would not be a bad thing to bring on bears back into the picture. This was the main thing that I saw this week that was really interesting. A shift from growth, momentum, and overcrowded areas into value. Value meaning areas that are just, down in the dumpster. We have, a big event coming up this week, the 20th, Friday. It's called Quad Witching. I'm not going to go into that. Feel free to Google that. But nonetheless, it will cause a lot of interesting shifts. We did see some of that this week from a lot of the indexes rebalancing, saying, the equal weighted like an SPY equal weighted index is going to rebalance. So the high momentum movers, the overcrowded areas, are going to shift down and rebalance to a lot of the lower areas. And so that's what we see here. So growth got hammered here. Not necessarily growth, I shouldn't say that, but momentum areas, overcrowded areas. Look at this, 4.6% move up in value versus growth. So this is why you're seeing, I'm telling clients, under the table, this is really not great what I'm seeing at. This could be great midterm, but short term, I am concerned. I want to see these growth names gather, establish a base, and then go higher. I think we need a little bit more downside before we go higher, but these will be the areas I want to see growth continue to lead. That is historically a great sign for the entire market. I want to see this area take back off again. I do think it'll happen. This shows you key areas of support below the 3,000 level, the 2960 level. These are all important technical levels. Up above, this is the all-time high, the 3027. These are kind of extreme high areas in the short term. I don't foresee them happening, but midterm I do. So I want to be very clear. I am bullish midterm, short term, pretty concerned, just trying to be level headed here and be realistic and open-minded. The market tends to prove people wrong, and I'm happy to shift direction when I need to. The fear index, this is really important. This is why I'm saying you got to be cautious here. The yellow shows kind of caution areas where, again, if you don't know what the VIX is, it's a fear index. It's very risky, but it's not something I'm invested in, full disclosure, for my clients, but something to pay attention to when we are in this range. The market kind of gets complacent and saying, okay, the market can go a little bit higher. This is a good range, but we did get into the range where I said, this is danger. We're probably going to see a shift in the S&P 500. We'll probably need a little bit of a dip here. And that happened. Once we get into the 14, below 14, it doesn't mean the S&P 500 can't go a little lower or go a little bit higher. You can see, we've gotten into the 11, 12 range here. And that is very possible. Again, that could very well happen. But you got to be careful here after a quick move in a lot of the major indexes, especially the Russell 2000. So be careful here. Another thing to pay attention to, I usually say oversold areas are near 30, but really, what are you seeing consistently? Right at 40 in the VIX is it's probably a better indicator for when to start paying attention and say, hey, probably get a shift here. Fear will increase, causing the market to get a little bit of a downturn. I don't expect much on a downturn. There's a lot of support below, but here's another interesting chart, the 10-year Treasury. This is as of Thursday. So I want to give you the picture on Friday. It just recently closed, so this isn't updated quite yet. The 10-year Treasury was up like 6% today. That's a huge move, especially in one day. Now, the red is the 10-year Treasury. Look at this huge move up quick. But you might be like, Jonathan, look at this huge move, over the past several years down. I get it, but that's a quick move over like a 2-week period. So a 25% move in 2 weeks, probably a good sign that we need a little bit of, probably a pullback in the market a little bit. Again, this could go a little bit higher, but with a rate cut, what are the odds of that? I'm not going to bet on that side. So it's kind of interesting. So the red is the 10-year Treasury, the gold. Those are the two that I want you to pay attention. There is an inverse relationship, meaning they go essentially usually in the opposite direction. So silver, despite the fact that it is the gold color, is an inverse relationship. So today in silver was like a 3.5% dip. Full disclosure, I do own some silver. You're like, whoa, that's rough. But we actually are doing pretty okay in there from when I bought it. So I have gotten in much lower than where I got in much earlier than this move recently. So we're still doing okay. But could these go back? Could the 10-year Treasury go back down and could silver then get a little bit of a boost up? Yes, I don't expect much, but a little bit boost here, and then I'll get the heck out and shift into growth, which hopefully will establish a base. Again, it could go a completely wrong direction, and I will be ready to change. This is a 20-year treasury, just kind of showing you key levels here again, kind of in no man's land. This gap here is testing that level. Probably, I hope, goes a little bit higher for a little bit of a dip for the market. Again, I'm not pessimistic midterm, very bullish midterm, but I think seeing some of these oversold levels, I just got to be real. That's a big move down in 2 weeks in a treasury, a 20-year. So just giving you the full disclosure both ways. Put call ratio, I showed you this August 18th when recession talk was in the air, and boy, it's amazing how quick that can change. We have gone complete opposite spectrum from recession to all-time highs and much higher within a month, and all because of a few tweets. It's just the reality. Feel free to put in your 2 cents there. I'm not seeing concrete details yet, which makes me really concerned for the people that are in a FOMO state, in a fear of missing out state. Got to be careful. FOMO is just as strong as selling at the bottom. So we have to be really careful here. And I get the same calls from the same people at the bottom as at the top saying, hey, why are we not in here? Because I'm seeing overbought areas. That's why. And I appreciate those commentaries. I'd rather have those clients call me. I love the commentary and educating, but that is why. And I hope this video helps you as well. So in short, high levels and the put call ratio, puts, high level and puts, meaning there's protection going on. People are concerned. They're protecting their portfolios. And look where we are now within a month's time. The yellow area is an area you need to be cautious with, saying, well, this shifted pretty quick and it can continue a little bit more. Let's be real about that. As you can see, this is where we're at, but we got to be careful. Again, this is as of Thursday, so this is not incorporating Friday, but it's interesting to note where this is in relation to the VIX and the S&P 500. I showed you when the put call ratio was high, this is a sign usually the market tends to do well. Down here, it's usually the inverse. I do believe we could grind a little bit higher, and that is indicated here. But I'm not sure the risk reward is there for me personally. So that's why I'm very cautious short term. The TRAN just showing you again where we hit a bottom here, and now we are at a key resistance level. And it did actually, I believe, go through this, which is encouraging, but it's still struggling with that level. We'll see what happens next week, but you can see we tested this level, went up. Is this a little overbought 10% move in a month? I'll leave that up to you. I usually back off when I see that in a month. I'm just being honest with you. I try to be a realist as an advisor and say there are times to be in and times you don't. I'm cautious here, headed into what will become likely a volatile week. So just trying to give you a fair, balanced perspective, the good and bad. There's a lot of good here in the technicals. We got to be real about that. The IWM, same thing. Tested low levels about a month ago, said, hey, buy this. We got out quite a bit early, to be honest with you, and that's just full disclosure. I'm just saying from here to there, I'm not seeing a lot of reasoning why we went that high. And that, again, markets are unpredictable. So I want to see a little more concrete evidence. I'm not really seeing it. The reason why the Russell 2000 and the Dow have outperformed within this week is because there are more financial companies inside of those indexes. So that is why they are outperforming the S&P 500, why they are outperforming the NASDAQ, because the Russell 2000 has more financial companies within there. Why are financials doing well? Because yields are going up significantly. And it was interesting today, though, that we started to see the Russell take a break despite, a 6% move in treasuries, which is interesting. I think there's a slowdown there. I think you got to be careful. And finally, silver, we talked about this earlier, the inverse relationship between treasuries and silver. It's at a key level. I might have to get out of this full disclosure, but we still had a nice advancement from where I was when I actually got in. So it'll be interesting to see what happens next week. Finally, again, this is another perspective. It has nothing to do with me. Shout out to Bespoke. And it's just, I've shown this in many of my market commentaries in the past, and some people like these. So it's showing a variety of different indexes, and it's basically saying poor timing. It doesn't mean we can't go higher. I want to make that very clear. This could go much higher in the overbought section, in overbought territory. But they're basically saying because of the volatility, not the volatility, but the velocity of this move up, you got to be really careful. They're basically saying the only thing neutral at this point is the Russell mid cap, which you've seen the move that we've seen in the Russell 2000. So another perspective, doesn't mean we don't go higher here, just kind of interesting. And finally, another reason why I am very cautious. See if I can find it. They said this, and they are just trying to help people. They have no real, incentive to push people one way or the other. Careful out there, near term. 10-day advanced decline lines for this week of the best performing sectors have gotten extremely elevated. I wouldn't go as far to say extremely. I'm just saying this quick move and virtually all these leaders, rarely do you see all these areas do well at once at the same time. I mean, you can just look at the chart and say usually there are some that do better than others. That's where I'm saying I'm a little concerned. Everything seems a little overbought here. Need a pullback, rinse, build a base, and go to all-time highs and higher from there. So I do hope that helps. Let us know if you have questions, but let's conclude with our final thoughts. I do not see a recession in the next 6 months. There is weakness in manufacturing, farming, and business investment, though 70% of our economy is consumer-driven, and that area shows strength, so that is good. I think we need to see a shift from risk-off assets to higher-risk assets to push us higher. Otherwise, I think it'll be difficult to push through all-time highs short-term next week. Quadruple witching, like we said, that is Friday the 20th. The Fed meeting is Wednesday the 18th. That's huge. We could go a little bit higher, but I am not going to be a pig and get slaughtered. So there's a lot of optimism in the air. I'm a little concerned that people might try to add here, which they could do okay, but I question the risk reward. So hang in there. We will hopefully on a dip catch the rally and go much higher from here. As always, we look forward to giving you a balanced approach, the good and the bad. Every day in the market presents new learnings. We will keep an eye on the drama next week, keep you apprised. And as always, have a great week and call if you have questions. Thanks again for your support. Have a good one.